Hello, everybody. Welcome to another R2F Weekly Market Analysis video where I'll be using ICT's concepts along with my own discoveries. Without any prior preparations on the chart, I'm going to go through various pairs and give you a realistic view of how I perform my analysis on the weekends before the new week. I'll give you my take on what has been happening and what I'm expecting in either the coming days, weeks, or months. All right. Without further ado, let's get right into it. As usual, I start on the dollar index as my base, and then I'll have a look at some forex pairs, major and minor pairs, some commodity pairs, um, the S&P, and Bitcoin. Okay, so usually I do my analysis on Sunday before the week started, but this week I was a bit busy, so I'm doing it on a Monday, a few hours after the market is opened. So what I usually do is start on the dollar index and do a top-down analysis. I'll use this video to start with the 12 month. Yes, I start on the 1 year chart where every candle is 1 year. And using ICT's concepts, I'll do a top down and annotate liquidity, premium discount, PD arrays, and whatnot. Okay, so for consideration, let's have a look at this yearly chart. So we see a yearly gap here that got traded into. All right, so I'll annotate that as a SIBI 1 year. Okay, and we see that it got traded into here once. One more time the next year in 2017, came down to this yearly gap here, responded, retraced, almost came all the way to the top and came all the way back down before expanding back up again. So a little bit of a range bound consolidation here over the span of a few years. Coming all the way into, this was around COVID time, this candle here. So there's a lot of choppiness. And during 2001, the dollar started to rally. 2002, large rally and a retracement. 2003, slightly range bound. And now we're in 2004. Okay, so let's note the previous year high and the previous year low. Okay, so let me just change the style. I'll say previous year high and previous year low. I might as well annotate this gap here. This gap is a signature gap of mine, R2F gap, so I normally highlight it in gray just to reference it because it's one of my higher probability gaps. So I'll just call it a busy 1 week. R2F, busy, SIBI are ICT's concepts and what he calls his buy side gap and the sell side gap. Okay, so let me just change the visibility. Yeah, that's fine. I'm just going to change the visibility so we don't see it so much on the, I guess, on the hourly and minutes chart. Okay, so what it looks like now is that we came up to this order block. I'm bullish on the dollar, by the way. If you've seen any of my other videos or analysis on TradingView or YouTube, I'm bullish on the dollar, so I'm expecting higher prices. We came in once here to tap into it. Now we're back into it. A lot of the time, that indicates that we're going to use this gap as an inversion gap and possibly find support. Okay, so my consideration now is this range high and this range low and this gap here. This is not a 1 week gap, sorry, 1 year. Okay, so to have a better idea of the chart, let's go down to the 6 month. Okay, we saw a larger 6 month gap. Price trade into it one, two times and started expanding up. Still not too much information, but we have a slightly clearer view. We have also a 6 month gap here, and which was also a yearly gap, traded into. We get a displacement down and a quick reaction back up into this breaker block. And what it looks like now is, okay, we also see a 6-month gap here. We see how that got traded into, and then we retrace down to another 6-month gap. So this is how the price delivery continuum works, how the PD array matrix works. Prices bouncing from PD array in different time frames, going from premium, discount, etc., etc. Either going into internal range liquidity or external range liquidity in the form of larger swing highs and swing lows. Okay, so let's go down to, not going to go down to every month. I normally do that on possibly the daily chart or the hourly, but I won't waste too much time. Okay, let's go down to an even lower chart. Let's go down to the monthly. So now we're somewhat in this range. We got a previous year high, previous year low. Let me annotate this. This is a balanced price range here, which extends to there. Let me highlight it in my monthly color. All right. We see price come above. Let me just 1 month. It's about IFG. That's how I would annotate it. Okay. We expanded above it, and now we came back into it. So in this case, often if price hasn't reached a significant order block, I would be looking for this to be used as support. Even if it were to trade into an order block, there should be some sort of reaction, unless we're very bearish, which I'm not. I'm looking for higher prices at the moment. So let's go down to skip right down to the 2-week. Okay, 2-week, we came here, some equal body highs, which I see as a form of liquidity. And of course, we have this 2-week gap up here. We have it on the monthly. Monthly, we're already in this gap, but the range is so huge, we can use a lower time frame. There's a nice gap up here, which I see as a valid target as well. Okay, so keeping in mind, we are looking to use this as this monthly BISI, which was also monthly SIBI. So I'm just going to call this a SIBI instead. I'll confuse myself. And let's go down to the weekly chart. All right. So we're back into this monthly, and we came above this, you can call it a breaker, reclaim order block, whatever. Just let me highlight this as a weekly BISI. BISI 1 week. Okay, so I'm always looking to see if these PD arrays are traded through and where the bodies close. Okay, I'm not concerned about the wicks. This weekly BC was respected, but the wick came all the way down here and the bodies closed above it. That's, to me, that BC is still it's still valid and it's still working. So this is a weekly one here. All right, I'm gonna hide this yearly gap. Now it's very big. I'm expecting price to trade above it into that area, so I'm just gonna hide it now. Show it on the 6 months and above. Okay. All right, things a little bit more clear. We had a buy side, price traded down, ended in somewhat of a doji, took up the previous week's high, not that one, and then traded down, closing here. Okay, so in most cases, I would expect price to make another low, because that seems, it depends. There's a large wick here as well, and I'm bullish. So I may not be expecting this to use this weekly gap as an inversion gap to go lower. In some cases, a close like that, I would be expecting it to come into it and then down into another PD array or area of liquidity. But in this case, it's still unsure. It's not high probability. How do I put an arrow just to show what I would normally expect? I'm not saying I'm expecting that right now. We would have to go to lower time frames. Okay, let's seasonally, we're in a month of May where May has a bullish dollar. So we have that going on our side. We don't want to be too bearish in this case because we're not even bearish anyway. If seasonally we're bullish and we have a bullish higher time frame bias and narrative, you have to be, well, at least I'm cautious about taking shorts, right? So let's go down to the 5-day. 4-day. Okay, let's go down straight to the 3-day. We have a 3-day R2F gap here, which is normally a high probability gap. We see a good reaction and prices lingering in here. There's no other PD arrays here besides this buy side liquidity of relative equal highs, which is good. I do like relative equal highs being created on the opposing side of the market. So I can see price trading up into it. This three-day gap, 1 week gap, all being respected. So now we're in this range between this buy side here and the sell side here. So we still could make another low, but we may not. Okay, so this week, at this point, going down to the daily chart, I'd be considering the news events. Okay, so now we're on the daily chart. I tried pasting the forex factory calendar on here, but since the file's too big, I'll figure it out next time. But today we just have red folder news for New Zealand dollar, not so applicable to the dollar index. Tuesday we have pound, climate change, climate count change. More importantly, we have core PPI and PPI, and Fed Chair Powell speaking on Tuesday. So for me personally, today would just be scalps, and if I were to be trading, I'd be looking for price to be taking out small, intermediate, or minor swing highs and lows in the form of liquidity, or just building a narrative um, for later this week. What do I mean? PPI can be quite volatile, and as we know, smart money wants to engineer liquidity in the form of trapping traders in the wrong side of market. So if we see price, dropping slowly the entire week, and we're bullish, that's good. We can look for, we can anticipate a large expansion in price during CPI or PPI. On Wednesday, we have CPI. Okay, and other news for the Australian dollar, but we have CPI for the US dollar, Empire State Manufacturing Index, and retail sales. So we have a lot of red folder news to navigate. On Thursday, for the US dollar, we have unemployment claims, and Friday, nothing. Okay, so we have a lot of red folder news, keeping that in mind. Keeping in mind, we're looking for bullish prices, which I think should happen this week because we are currently in bullish institutional order flow. I don't see price coming down into the weekly gap again unless it wanted to take it out, but anything's possible. During these high impact news events, candles can do amazing things, but mainly I'm looking for the wick and I'm looking for where the body closes. Okay, so let's go down to just a slightly lower time frame. Okay, we saw price trade into this gap, expanded lower, and now we're just waiting. There's nothing of high probability now. At this point, I'm looking for manipulation to take place, and I'm waiting for the news to unfold to show me bullish prices. So I'm looking for manipulation and a reversal, and then looking for a PD array to go long to take out this buy side liquidity and just move higher, right? Just to note, we had a volume imbalance here where no trading took place. Came into that slightly. Chip chop looked like we were expanding higher just to fake out traders and then started expanding lower. Now, perhaps making people think that we are bearish. So, great, great, great. Let's have a look at the euro dollar. Okay, let me clean it up. I have all these on my chart. I'll make it completely clean so we can do analysis fresh. Right, starting from the 12 month. 12 month here. Okay, to save time, I'm not going to label it. We can see that's a 12 month in this blue color. One here as well, yellow candle. Liquidity came into it. So we see this bounce here. We see a reaction. Great. How many pips is that? Almost 1,000 pips. Could have been plenty of opportunities in there to take a trade from this yearly discount array into a premium array of this range. It came into this yearly gap a couple of times. There's one here as well, but eventually it reached higher. So I have a bullish dollar in mind. So I'm looking for lower prices on these charts. This is yearly time frame, which is way too long, way too high of a time frame. Let's go to the 6 month. Okay, we see an expansion down and a fair value gap here with a nested wick to the side. So at this point, I'm still expecting lower prices. If prices does expand higher, where am I targeting? Here for the minimum, this 6 month gap. Okay, 6 month monthly gap. So should be 6 months. Targets for a bearish euro. I would like price to come back into this wick. You have a large wick here. It didn't come into it much. Took out the open, but it did not come into it much. It just came into this fair value gap here in the form of a CB in the 6 month. And we see price expanding, starting to have a reaction, expand lower. It doesn't look like it's closing higher, but I think this week we should get more information on that. So target for a higher euro would be up here. Target for a lower euro would be around at least the upper quadrant of this wick, mid quadrant, and possibly the low. There's another 6 month gap in here. Okay, let's go down. Just go straight down to the monthly, huh? Gonna remove that quadrant, or just to have a better idea. This entire range is the wick, so we have a nice gap here on the monthly as a target. Okay, we had a large consolidation, not many PD arrays in here, small one here where price reacted, came up, and then started coming down again. Now we're here on the monthly time frame. All right, this month we still have 10 days, no, more than 10 days, sorry, 17, 16, 17 days before the month closes. On the weekly, expansion down, taking out these lows, creating a gap, and now we're up here. Somewhat of a breaker, order block. So I'm watching this entire area, this entire order block to see if prices stay below it. If we can get a weekly start expanding lower, that shows that this is good, then we can start targeting this low, these lows, and start coming into here again. We had a weekly here that got traded into, so I would expect some kind of equal lows to be created around here, retracement, and then expansion lower, deeper into it. I'm going to go straight down to the daily. Okay, entire daily range here, very large range. Daily CB and a breaker in here. If you go down to like a 12-hour, 11, 10, just trying to go to a time frame where this breaker is a bit more visible. I think it was a large, it's somewhat of a gap. So I'm going to stay on the daily. Came into it again. We haven't broken this high. We may not break that high. For the sake of it, I'm going to go down to a 4-hour just to show you how I use inversion gaps. There's a daily one here. CB got traded into. It did not make a lower low. Expanded up, traded up, and traded down into it. Down to the low of the gap. You can see where the bodies close and open. All right, this is not coincidence, and it's not buyers and sellers entering the market. Another gap here. Price got respected, and now I'm going to remove this gap, yeah? overall in this range, I am expecting lower prices. So what do I want to see? And what would be permissible and possible? All right, price came into this gap, expanded, and it's another small gap here. So I want to see if price wants to come into this somewhat of a breaker here. This body is here. It's going to highlight this red. And I'm going to use my path chart just to show an example. Does it want to do that? And then go lower? Or if we're just going lower from here, I want to see this daily be disrespected, get a nice close below it, wherever it is, and then trade back into it. Look for a lower time frame PD array, 4 hour, 3, 2 maybe. Possibly a 1 hour if there's a nice market maker model in there, and then take a trade to go lower. And then use that as an inversion gap and go even lower from there. Okay, so that's how I look for gaps to be disrespected and be used as inversion gaps. So those are my two possible scenarios. If we expand higher and close the daily and weekly above this, if we close a weekly candle above this area, that would be bad, and I would be thinking we'd be moving higher to other areas of liquidity. All right, so for now, this is my two scenarios that I'm looking for, and we get a weekly close. I'll share my analysis for next week. Let's go to the pound. The pound, expecting the same things. All right, okay. So for the pound, we have this monthly gap. I'm not going to go to the yearly. We'll just keep it mainly for that dollar analysis. So we have a monthly gap here. It's a shot considered a balanced price range because we get a gap closing a gap here, CB, and then we get a bullish gap. So it's a quick turn out of it. Price coming into this wick, and overall we have a monthly gap here. So order flow is still bearish. So I'm seeing if this gets reaction. If that does, then we're possibly looking for slightly higher prices, equal highs here, etc. So it's a monthly time frame. We don't worry too much about it. Let's go to the weekly. Okay, we get a weekly gap here. Price closes above it slightly, but we're still getting a reaction. There's a weekly gap here that got respected. Then note that price came into this bearish gap, but it does not look like it is violently trying to close above it and price higher, right? So normally if, let's say, smart money wanted to trap traders into their positions and not give them opportunities to get out, they would do a fast reversal and continue higher. So if people were caught trying to go short, now they're short and they're getting liquidated, having sold their positions at higher prices, and smart money is continuing to buy and push prices up. We could go down to the daily. Same as Euro, had a daily gap in here. Look at these bodies. Equal highs to me of even bodies are seen as liquidity, so we could get price coming into that to take that out. And it could just come here, here, here. It depends. Or if we're heading higher, here, here as well. All right, so yeah, let's just note this 12-hour. We get a 12-hour gap here, sell side gap, trades into it, creates a buy side gap, trades into it, opens here. I think that's the opening gap, right? Opens here, comes all the way up to here. So now what we're looking for is, does price want to move higher, or does price want to move lower? If it moves lower, this could possibly be used as an inversion gap. We can see price come deep into this wick, cut through this breaker over here. Okay, so let's go down to the New Zealand dollar on the weekly. Again, if we're expecting higher prices on the dollar, we're expecting lower prices on all these pairs. Price is still in this weekly gap here, not yet closed above it. It's totally permissible for price to trade into it a few times. So we've seen even on the Euro, the yearly chart, we saw price trade into that yearly gap a few times before actually moving lower, but we did not get a close above it. Okay, So let's see. Yeah, won't go too deep into this one. You see this gap here, and now we're expecting possibly lower prices on the weekly, maybe to come into this gap here. Australian dollar on the weekly, same thing, but there's some relative equal highs, and there's a gap here, relative equal highs there. Excuse all my other drawings. Okay, so these are dollar pairs. Dollar pairs, we're expecting higher prices. So this is, let's just start on the monthly. So this is the dollar Swiss franc, highly manipulated, as you can see by these wicks and this consolidation. So nothing's that great in terms of high probability, but what I'd be looking for right now is a possible area to target. What it seems like where it's going is into this gap here on the monthly with a breaker into an area of premium. All right, 1, 2, 3. We may come into here before moving down or moving higher. Anyway, mainly I'd be targeting this area. On the weekly, considering our bias would be targeting that area, I'd be looking at this weekly gap if we trade into it. So I'll just highlight that quickly. Daily. Okay. So you can be bearish on the daily, bullish on the weekly, bearish on the monthly, bullish on the yearly. I'd be looking for lower prices on the daily, preferably coming into this gap here. Very nice breaker, unicorn setup. Set the path. If not here and down, then up here, down. Do whatever it does. I'm not predicting some pattern, but something like that, right? If we were bullish and if we were using this gap, and price could come all the way into this one as long as the bodies of the weekly don't close below here. Whatever time frame you're on, look at the bodies and don't consider smaller time frames. Okay, it all depends on the time frame you're looking at. So this is how price is all connected together. And let's go to the yen. I also do not like the yen, highly manipulated. Yen is at all-time high, so I don't have too much to say about that. Let's go down to the weekly. We came into this gap, now we're here. Came into this weekly gap, found support here, so we could still be moving higher if we get a bullish dollar. You can see how a gap got traded into on the daily, but came down on the weekly. All right, so it all depends on the time frames. Okay, let's just go to the 6 hour. Yeah, so nothing great here. No higher time frame bias. I wouldn't be touching this yet. Just dollar CAD monthly, also nice equal highs that I wanted to target. You can see a nice monthly gap here, and we can see how it's still respected. There's no candles closing below the gap. Okay, it came into it once, still again, out and then in, out and then in. Now we're here, consolidating. I would say accumulating positions to target these highs here. Okay, why these highs? These are relative equal highs. Traders getting into here are calling this a double top, and more foolish traders would be trying to see if it creates a triple top, okay, on a scalp or a possible swing, maybe. But yeah, that will be taken out if it does create a triple top, because this is where people are putting their orders, and smart money would love to take the other side of their positions, okay? Because liquidity is what moves the market, it's the lifeblood of the market. The whole market moves on liquidity, right? Because it's a zero-sum game. If you wanted to buy, someone would have to sell to you. Smart money wanted to sell, they would need someone to buy it from them, and who else would buy it from them except people who do not know where price is going and have silly ideas. Okay, so yeah, monthly, get a weekly gap here. Are we going to respect it? There's no other PD array here, but as we know, price can just change on a dime. Price can come down, like for example, to this origin order block. Price came into this gap, but no, we're still moving higher. So most likely We may be moving higher, but as I said in consolidations, price is taking out just highs and lows, right? The small high came up to here, almost didn't take a high, almost didn't take a low, took out the high, came down, looked like it was going back up, took out this low, took out this high, took out this high, came all the way back down, and yeah, it's not out of the realm of possibility of coming lower and coming back up, but mainly, let's see where this monthly closes. If a monthly closes down here, okay, I I I may be bearish, but I would look again at the higher time frame, see if there's any gaps. Look at that 6-month gap here. All that choppy motion came to the 6-month. Now we're expanding higher. Probably a clear one, the 3-month. Yeah. If you can't see it, remember the monthly gap was here, but this is a 3-month gap, and look at that. Look at that. So you have to look at all the time frames, especially the higher time frames. Work your way down and occasionally check these higher time frames again, especially end of the month, end of 2-3 months, end of the week, 2-3 weeks, days, 2-3-4-5 days. Check these. If you're using ICT's concepts, these are super useful, super important. Okay, so this is forex pairs. You can have a quick look at these. It's a couple of forex miners. All right, somewhat of a consolidation in here. Nothing great on this chart, to be honest. Yeah, no large expansion. Nothing really interesting on the pound yen, especially on the weekly. So I'm not going to talk about it. We don't talk anymore. Okay, dollar pound. Where are we on dollar pound? Again, dollar pound is one of those pairs which not great for position trades, even swing trades. Not always the best. Okay, so we got expansion here. Price came into it, came up into the wick, came all the way down, expanded down this gap, traded into the gap, another low. Now we're here, creating this equal lows, but we're still chopping in here. So yeah, nothing to say about this pair. Nothing great. And dollar, pound, Australian dollar, just a random pair because I was looking at it for somebody. Again, nothing great. This is equal lows. Price coming up into this order block. There's a nice R2F gap here. You can keep an eye on it if you want, if you can remember it for the next few months. And often this gap is used as a strong area of rejection. Okay. All right, let's have a quick look at gold. I don't know. Okay, I normally trade forex pairs, normally pound and euro, but we can just have a look at gold. Gold again is at all-time highs, so I have nothing to say about that. Some gaps here. Eventually, we may come down to try and find support there. Okay, got a weekly gap, got traded into. But with so much in premium, it would be best just to be patient. Okay, if you're gonna scalp, I would go to the daily and less. To try and find something. So yeah, you see the daily come into here. It makes another low. Great, but we also get a reversal. Came back higher into this gap. Let's go down to 8 hours. Now we're in here. If you can come into this gap and find another reaction on a lower time frame, then you could take a trade long. Okay, so look at gaps, how they're respected, and look when they get traded back into, are they disrespected? Okay, just to go look at oil. Also, this video will take too long. Yep. So I was expecting bullish, more bullish prices on on oil. I think. Remember when it came that low, when they were paying people to take oil. Okay, this is a monthly. Let's just look at the 12-month quickly. 12-month gap here. 12-month gap. Yeah, yearly gap. Price. You can see. You can see the. You can see the bodies, kind of like not really closing above the midpoint. So the midpoint is very important. Consequent encroachment, as ICT calls it. Yeah. Okay. So closing slightly above it. Kind of creating these equal highs. Okay, we're here now. So possibility, price comes higher. I think eventually oil would be higher. Okay, so see this yearly gap here, trade it into once, twice, thrice. It even comes into it one more time, and then while trading into this gap, it trades into this gap one more time. Now we're in here. Okay, so we go down to the monthly. Still in this yearly gap. This monthly gap here. So I'm just looking at all these gaps. Okay, how the clues of institutional order flow gaps. I think I need require a gap if I'm going to have a bias. If there's no gaps, then forget it. Just forget it. Okay, so we have a monthly buy side here, monthly sell side there, and you can see neither of them are being too respected. So we're kind of in a consolidation. We see this buy side here, and it looks like it's going to close below. Let's go to the weekly. Weekly's been dropping. So I'm waiting to kind of see what happens at this point. Yeah, we have an order block here. Just go down to the daily. Anything on the daily. So we have daily order block. See, we get a daily CB in here. Trade it into. See, if we make another low. If we don't, if we trade back into it, could look for a long just to go higher. Some equal highs here as well. So I think CPI and PPI may offer some clues into what smart money's plan is. What else do we have? Let's have a quick look at the what do you call it? The S&P. Let's look at the monthly gap. Okay, so if things are unclear on the weekly and you're wondering what did price do that, look at that. Okay, so what did price come here and then stop and then start reversing? Go look at the monthly gap. It's quite respected, isn't it? All right, so now we're in the weekly. Oh, I don't see anything to take on the weekly. Okay, go down to the daily. Great, or the sub weekly. So on 5 days, nothing. 4 days, nothing. 3 days, you have more clear order blocks, right? 2 days, clear order block here, and then the 1 day. So what do we see? See a daily gap here. Price trades into it. Then we're here. If we haven't reached gaps are good if you haven't reached the area of liquidity yet, such as equal highs, all high. Okay, so price has not reached this area. Down into this gap, that would be perfect. It looks like they may be in. This is also an R2F gap. 12 hour, maybe more clear. 10, 8. Let's go to 8. All right, so now we came into here. We took out that high, and now we may be coming lower. If we come into here or a small stab, then this would still be applicable. I think we could still see a reaction here. A little tip I use is, I'm a bit more biased sometimes for the same pattern in a bullish scenario rather than a bearish, and for different patterns, a bearish I have more trust into it. So what I can do is, it's all the same anyway. But I'm trying to invert the chart. So if you're looking for something like, for example, a bearish gap in this situation, a bullish gap, sometimes I flip it and I have more confidence in a bearish gap because my eyes maybe are more accustomed to identifying it, right? So you can always use that little trick to kind of like help your brain, right? So this is a relative equal lows as well. So if you trade into here, nice order block, go to the lower time frame, look for market structure shift, whatever it is your signal, and then go lower. So just doing a top-down analysis, have a higher time frame target, higher time frame story, and then go to a lower time frame and ride that wave with a higher risk to reward. It doesn't have to be high. It can be 2, 1, 3, but you have that on your side rather than, let's say, just having this analysis and expecting price to come all the way down here and then bounce. You don't know. Okay, So this is the monthly, right? Monthly gap. If you have that on your side, there's some nice trades to be taken. And finally, let's have a look at BTC. I normally like to look at the USDT chart because I'm used to trading on Binance. Where's it going? BTC is, still quite a new asset. It's a relatively new technology, and we don't know if it's complete manipulation or it's something that would be widely accepted in the future, or just be destroyed, terminated, and shut down by smart money, basically. All right, so I don't think we can go to the yearly. Let's go, okay, 2 months and 1 month. 2-month gap, nice, okay, nothing too much. 1 month, get a 1-month gap here, but a large black candle. We may see lower prices. In that case, I'll just highlight this gap just so we can see on a lower time frame, monthly gap. Let's go weekly. Let's go 2-week. Okay, 2-week gap, trade it into 1 week, 5-day, 4-day, 3-day. 3-day, we see a little gap here, small one, but go trade it into, and we take out another low. I love it. I love it. 2-day, same thing, same gap. Daily. Okay, so on the daily, you don't see a gap, right? You're like, why? Price took out this high. I wanted to buy and use this order block or this breaker as support, but then you got stopped out. Always look at higher time frame, guys. So we see price trade into this gap. Or was that the gap? Let me see. No, that wasn't the gap. The gap was actually here, and this candle went into it. But on the daily, we see also kind of almost a similar thing. Price trade into the gap. And we're going lower. So now we're in this area. We may not make another low. We may find support and then move higher. If there was a large expansion, we can go to the 12 hours. Okay, so we're still in here chopping around. Price may do something. I mean, in the realm of possibilities, you always have to consider both sides. Okay, you can't be too biased on one side and just think that you're never wrong and price has to do what you have to do. You always have to consider what can price do to invalidate my idea. Okay, so you can chop around, even go pretty low, or even just take out that low and then start expanding higher and just expanding higher and higher. That's one possibility. But we see a gap here, trades into it. We could just be moving lower, right? 6 hours, which seems like the case currently. And where would we go? Take out this low, first target. Come on to here. Go back to the weekly. Okay, so we can see we're quite at a premium. We took out this major high. A lot of liquidity above these highs. People weren't expecting Bitcoin to even survive. Let's note the small gap here, just to show you. Yeah. So currently, not basically summarize this one. It's not many PD arrays in terms of gaps. Price is kind of making these small gaps occasionally and still respecting them, but price is still chopping around and moving lower. I expect it to move lower into here. Go back to the monthly again. We could come more to the midpoint. You can put a fib and grade it, or you can just have the midpoint by using TradingView's tool. See where it goes. 2 months, 2-month gap in here. I don't think it will go that low unless we are super bearish, but anything's in the realm of possibility. Don't think crypto is just going to the moon. Okay, stay flexible and have some risk management. Alrighty, so I think that's it for this week's monthly analysis. Hopefully that was insightful. If you'd like to learn how to navigate the markets like I do, if it resonates with your personality and how you think you like trading, okay, I like this way. It gives me confidence. I don't feel lost, confused, hopeful. What I see works, and that gives me faith in what I'm doing. Okay, so yeah, feel free to get in touch with me via comments on or TradingView's Messenger feature or on any other of my social accounts. Okay, so yeah, have a safe trading week. Until next time, good luck. R2F signing out.